Bitcoin's dominance is at an all-time high, and it's outperforming every other asset in the digital space. But why is it thriving while other crypto assets struggle? In this video, I'm breaking down how on-chain data shows Bitcoin's growing value and real-world utility, the rise of institutional adoption and its impact on Bitcoin's dominance, and why Bitcoin's market is evolving into a more stable and resilient asset. Stick around. This is the deep dive you won't want to miss. Bitcoin has come a long way since its creation in 2009. It's now a globally recognized asset with huge liquidity, trading 24/7, unlike traditional markets that shut down after hours. That means when major world events unfold, like geopolitical tensions or economic policy changes, Bitcoin is one of the few assets where investors can immediately react, even over weekends. And that's exactly what happened recently. Over the weekend, Bitcoin saw a sharp drop after the Trump administration rolled out tariffs on Mexico, Canada, and China. Since traditional markets were closed, Bitcoin and other digital assets became the main outlet for traders looking to adjust their positions. The price tumbled from 104K to 93K over a 10% drop, before rebounding back to 102K. Despite the turbulence, Bitcoin has held above the 100K mark for weeks now, something many critics thought would never happen. If we look back at previous milestones, Bitcoin first hit $10,000 in 2017, meaning it took 7 years to scale up to this level. But as the asset grows in size, so does its inertia. It now takes significantly larger capital inflows to sustain its market cap growth. To break this down, we can look at the realized cap, a metric that tracks the total amount of capital that has flowed into Bitcoin. If we use the bear market low of November 2022 as a reference, Bitcoin's realized cap was around $400 billion. Since then, roughly $450 billion in fresh capital has been injected into the network, more than doubling the realized cap to about $850 billion. This metric gives us an idea of the total value currently stored in Bitcoin, with each coin priced based on its last on-chain movement. While many see Bitcoin primarily as a store of value, it also serves as a decentralized payment system. The Bitcoin network, supported by miners and nodes, enables global transactions without relying on banks or payment processors. We can see that over the past year, Bitcoin has settled an average of $8.7 billion per day, adding up to a staggering $3.2 trillion in value transferred across the network over the last year alone. Both the realized cap and Bitcoin's settlement volume prove that Bitcoin isn't just a speculative asset, it has real utility. This challenges the long-standing argument from skeptics who claim Bitcoin lacks both value and practical use. Now let's zoom out and look at Bitcoin's place in the broader crypto landscape. Since the FTX collapse in November 2022, Bitcoin dominance, the percentage of the total crypto market cap that Bitcoin holds, has steadily climbed from 38% to 59%. This suggests capital has been rotating into Bitcoin at a much higher rate than into other digital assets. A big factor here is likely the launch of US spot Bitcoin ETFs, which have opened the floodgates for institutional investors. Bitcoin also benefits from a clear, well-established narrative. It's widely recognized as a scarce asset and a hedge against fiat currency debasement. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. When we compare the growth of Bitcoin's market cap to that of altcoins, the divergence is clear. From the 2022 market low, Bitcoin's market cap has skyrocketed from over $300 billion to nearly $2 trillion. Meanwhile, the total altcoin market cap has grown from around $200 billion to almost $900 billion. Even though Bitcoin and altcoins remain closely correlated, the difference in capital inflows is striking. Bitcoin is attracting the lion's share of new investment, which suggests that its dominance could continue climbing. A reversal in this trend would likely signal the start of a capital rotation back into altcoins. With Bitcoin now trading in six figures, you'd expect investor exposure to be at an all-time high. One way to measure this is by looking at how much of Bitcoin's total wealth is held in coins acquired within the last 3 months. Historically, when Bitcoin breaks into a new all-time high, we see a surge in demand from new buyers. This time, however, that surge has been more subdued compared to past cycles. Instead of a steady influx of new money, demand seems to come in bursts, peaking at certain points rather than being sustained over time. Another interesting shift is happening in retail investor behavior. Overall, there is a significant decline compared to the 2021 bull run. This is despite overall network volume reaching new highs and Bitcoin prices being much higher today. This suggests that much of the new demand is being driven by larger entities rather than smaller retail investors. The composition of Bitcoin holders is evolving and the market is maturing in ways we haven't seen in previous cycles. Looking at smaller holders, wallets holding less than 10 BTC, we see another change in behavior. In past cycles, retail investors tended to buy aggressively at euphoric peaks, often overpaying at the top. This time, however, they've been accumulating more strategically, buying during corrections and taking profits when the market rallies. This suggests a more disciplined investor base, even among retail participants. And that's a major shift from past cycles, where speculation and hype often led to irrational buying behavior. Also, when we look at realized losses during bull markets, the current cycle stands out as one of the most reserved. The only major event where investors took substantial losses was the yen carry unwind on August 5th. Outside of that, realized losses have been relatively minor, indicating a more patient and resilient investor base. This is a stark contrast to previous cycles, where we saw multiple phases of panic selling and capitulation. For example, the 2015 to 2018 cycle had several local capitulation events, and the 2019 to 2022 period was even more volatile, featuring major sell-offs like the COVID crash in 2020 and the minor migration in 2021. Another key shift we're seeing is in Bitcoin's volatility profile. Historically, bull markets have been accompanied by extreme price swings, but this cycle is different. Right now, Bitcoin's realized volatility on a 3-month rolling basis is staying below 50%. In contrast, past bull runs saw volatility frequently spike above 80% or even 100%. This reduction in volatility, combined with a more disciplined investor base, has created a much more stable price structure. The 2023 to 2025 cycle so far has followed a pattern of gradual stair-stepping, rallies followed by consolidation, rather than the wild swings we've seen in previous cycles. Bitcoin's market is maturing, and the way investors interact with it is evolving. Institutional participation is rising, retail investors are getting smarter, and volatility is declining. Whether this trend continues remains to be seen, but one thing is certain. Bitcoin is no longer the same speculative asset it once was. So, to wrap things up, it's clear that Bitcoin is proving itself to be a strong asset, especially in times of volatility. We've seen it recover quickly from significant price drops, such as those triggered by global events, showing that Bitcoin is not just a speculative asset, but one that can hold its ground during unpredictable market conditions. At the same time, institutional investors are playing a huge role in Bitcoin's growth. The surge in Bitcoin's dominance from 38% to 59% is largely due to this shift, with more institutional capital entering the market, especially with the launch of the Bitcoin ETFs. This is creating a much more stable foundation for Bitcoin, even as retail demand seems a bit more reserved compared to previous cycles. Finally, Bitcoin's market is maturing in a way that we've never really seen before. On-chain data shows that investors are behaving more strategically, with much lower volatility compared to past bull markets. This points to a more disciplined and sophisticated investor base, which is contributing to Bitcoin's evolution into a more stable and widely accepted asset. So, It's not just about Bitcoin's price, it's about the growing confidence in its long term role in the financial ecosystem. And that's all for today's analysis. Want more in depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.